In this video, I'll share some of the absolute best all-in-one technical analysis indicators available on TradingView. These game changers offer multiple insights without turning your chart into a chaotic mess. So, whether you're a newbie or an experienced trader looking to improve your price analysis, hold on tight. I'll reveal these tools one by one and show you some simple strategies you can try with them after watching this video. Let's get charting. Traders, if you like the content I put out on this channel, consider liking this video and subscribing to TradingView. So, the first indicator is called the Scalp Tool by DMEC. It was published not long ago, so not many people know about it yet. The Scalp Tool is an indicator created particularly for scalpers, hence the name. The versatility of this tool allows you to create multiple trading strategies for different timeframes and assets. The components used in this indicator are VWMA, the bands, support and resistance zones, and the RSI to determine oversold and overbought zones. The main signal in this indicator serves for pure short-term trading and is generated on the basis of the bands and the RSI. These signals typically have lower accuracy when compared to stronger signals. A buy or long signal is generated when price approaches the lower band, which serves as dynamic support. Similarly, a strong sell signal is given when price is near or breaks above the upper band. A great trend filter that cancels many fake signals is this volume-weighted moving average. When price moves below this moving average, the market is considered bearish, so no buy signals should be taken. To further cancel inaccurate signals, you can implement another condition, which is the position of the yellow and blue bands against each other at the moment the signal is produced. For example, when short-term selling pressure is high, the blue band drops below the yellow band. This condition double confirms the sell signal. If a sell signal occurs when the blue band is above the yellow band, consider waiting for the bands to cross or ignoring the signal completely. The easiest way to eliminate fake signals is by looking at the channel's background when a signal is generated. For example, when the market is in a strong uptrend, the background changes to green. During strong selling pressure, the background is red. If a buy signal appears on a red or no background, it becomes invalid. In the indicator settings, you can customize many parameters and find the ideal configuration that works for you. Overall, this all-in-one tool is super flexible. You can code it into a strategy and automate it with Pionex. If you don't know how to do it, check out this video right here. Alright, let's move on to the next indicator. This one is called Standardized MACD Heikin-Ashi Transformed. This advanced oscillator is designed to overcome the limitations of the traditional MACD. It offers a more robust and standardized measure of momentum, making it comparable across different timeframes and securities. By incorporating the Heikin-Ashi transformation, the St. MACD provides a smoother visualization of trends and potential reversals. This indicator comes with overbought and oversold zones, MACD histogram, Heikin-Ashi candles, and buy and sell signals. When it comes to canceling fake signals, the MACD histogram can be quite useful. Let me show you what I mean. For example, here the indicator produced a sell signal. It is quite obvious that this trade would have resulted in a loss. The very next sell signal was much better. The timing was just right. If we take a closer look at these two signals, we can spot the difference between them. You see, at the time the first signal was issued, the MACD histogram was blue, which means bullish sentiment is still present. Selling the stock at this time is quite risky. When the second sell alert was given, the MACD bar was red. Since MACD confirms the bearish sentiment, this signal has a much higher chance of being successful. Another good way to filter out inaccurate signals is to apply support and resistance tool, moving average or volatility channel to the chart. I know one indicator that works particularly well with MACD Heikin-Ashi. This tool is called the Kirill channel. Once installed on the chart, open its settings and disable the border top 1 and 3 and border bottom 1 and 3. This channel is similar to Bollinger Bands, but more precise. The logic is simple. When the price exceeds the upper line, the security is oversold. Price reversal is expected. So a good strategy would be to wait for the band to be breached first and then for a signal to be produced. However, if at the time the signal is given the price is outside the channel, it is not recommended to take a trade. This is explained by strong price momentum that shows no signs of slowing down. So to avoid getting stopped out, it is advised to open a trade only if the price is closed back inside the channel. Using support and resistance as additional confirmation can also be quite beneficial. Alright, so that was indicator number 2. The last tool I want to show is probably the most versatile and multifunctional indicator on the TradingView platform. This all-in-one tool has everything you need for comprehensive price analysis. The best part about it is that it shows the market trend in multiple time frames. Before, you had to constantly switch between time frames to get the bigger picture of what's going on in the market. Now, you just look at the dashboard and instantly see the prevailing sentiment. This feature saves you from going against the trend, which is key to minimizing losses and maximizing returns. For example, you wouldn't go long on the 5-minute chart if there was bearish sentiment on higher time frames. In addition, the indicator shows the trend strength in different time frames. Another feature I like about this tool is the multi-time frame support and resistance levels. In the settings, you can choose the levels from which time frame you want to be shown. The most effective ones are the 4-hour levels. They're usually very hard to break through. But if the price does break above or below them and immediately bounces off, more often than not, it signals a fake breakout. If you don't like trading with support and resistance, you can hide the levels and enable the EMAs, for example. If you don't like EMAs, you can enable the reversal bands and the volume profile. All these setups work very well. The winning ratio of this tool is around 70 to 80% depending on the setup. Here's one of my personal strategies with this indicator that makes consistent profits. For this strategy, you need to enable 4-hour key levels, a trend dashboard, buy and sell alerts, and a volume profile. I sell when the following is met. First, the price approaches resistance and at the same time exceeds the reversal bands. Second, a sell label is printed. Third, the trend on at least 4 time frames is bearish. Finally, the price is near the point of control, or the highest volume. I take a long trade when A, the price drops to resistance and exceeds the lower bands. B, the trend on the dashboard is bullish. C, a buy signal is generated and the price is near this red line. In general, this is a great indicator, but it is not free. If you want to learn more about it, you can check out the link in the comments. Anyway, thanks for watching until next time.